A recently launched fund is hoping to go a long way to increase investment in small business. As Günther Deutsch again reports, it's good news for a sector struggling to secure adequate capital.
Grovest is the third venture capital company to be launched since the introduction of tax incentives under Section 12J of the Income Tax Act. It collects capital to invest in high-quality small and medium-sized private businesses, especially in the technology and mobile industries.
It's not lazy capital. We'll be putting experience into the underlyings, and we're going to sweat the asset. They're pretty much early-stage businesses, and with the intention that we're going to look at a 5 to 7 year time frame horizon to invest with a view of returning in excess of 5 times capital, which equates to about 38% IRR over a period of 5 years. Any exits or businesses that we exit over this period, the proceeds will be returned to the investor.
And investing in Grovest comes with some hefty tax benefits.
If you're an individual and you're paying tax at the maximum threshold, you would be able to deduct 100% of the investment from your taxable income. So if you're paying tax at the 40% margin, you would be getting the 40% benefit. That also works with trusts, also getting the 40%, and companies would be able to deduct the tax benefit of 28%.
Of the other 2 venture capital companies in the country, one seems to be dormant, and the other is reportedly being sold. The Treasury says that slow economic growth may be a hindrance for Section 12J to achieve its objectives.
How the incentive works is that you create a company called a venture capital company. Private investors then invest in these venture capital companies, and they in turn invest in the small business companies. So there are 3 of them registered. We don't have any information yet in terms of how many people actually invested in it. I think the downturn in the economy the past few years probably has not been very conducive, but we'll have to see how it goes.
Venture capital professionals say it is also because South African investors generally are more risk-averse than their global counterparts. The South African Venture Capital Association says that a lack of institutional investment into venture capital is part of the problem. Pension funds simply find it too risky, and there is too much red tape involved in forming a Section 12J venture capital company. Another drawback of Section 12J is that it does not provide incentives for so-called angel investments, which is similar to investment into startups with no history. Meanwhile, Grovest says it wants to grow its investments assets to 1 trillion rand. Günther Deutsch, SABC News.
International business news coming up after the break. Do stay with us.